Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into company filings to find the juicy details you won't see in the headlines. Today we are cracking open Digital Realty Trust, S most recent financial report, and let me tell you there are some big numbers and even bigger strategies in play. Digital Realty Trust, a company you might know as DLR, is a giant in the data center world. They are the backbone for a lot of the digital stuff we use every day. Think of them as the landlords for the internet, the places where all the servers and data live. And with the world using more and more data than ever, these guys are in a prime spot. They have a massive global portfolio with over 300 data centers in more than 55 metro areas across 30 countries. That is serious scale. Basically, if there is big digital action happening somewhere in the world, chances are Digital Realty has a presence there. They are not just building boxes though, they are creating what they call Platform Digital, a comprehensive global platform for scaling digital business. It sounds fancy, but it means they are providing not just the space and power, but also the essential connections that make digital infrastructure work. As of the 31st of December 2025, their portfolio included a huge amount of rentable space, and a significant portion of that is either under active development or being held for future development. This shows they are not sitting still. They are actively growing and planning for the future needs of data-hungry businesses. They own or have investments in properties across North America, Europe, Asia, Africa, Australia, and Latin America. Scroller product offerings platform, they talk a lot about platform digital, and it seems to be their key strategy providing coverage, capacity, and connectivity. They offer everything from a single cabinet to multi-megawatt deployments. This flexibility allows them to serve a wide range of customers from small businesses to the world's biggest tech giants. They also highlight their interconnection services like Service Fabric, which is like the global highway system for data. No single customer makes up a huge chunk of their revenue, which is great for stability. Their largest customer represented about 11.7% of revenue in 2025, and no other single customer even comes close to that. This diversified customer base is spread across many industries, including cloud services, content providers, and financial companies. They have more than 5,000 customers. Now, every company has risks, and Digital Realty is no exception. They face risks related to demand for data centers, power supply competition, cyber attacks, and reliance on major customers. One point that caught my eye is their dependence on third-party power suppliers. If they can't get enough power, or if prices spike, it could really hurt them. They also mention the constant race to keep up with changing technologies like artificial intelligence, which requires more and more power and advanced cooling systems. So they openly admit that if the demand for data centers drops, their business takes a hit. That seems obvious, but it is important they flag it. They also point out that technological shifts could make their current infrastructure obsolete. This is a big one in the tech world. This is a pretty standard risk these days, but given the nature of data centers, it is even more critical for Digital Realty. A breach could not only impact their data, but also their customers' data, which is the very thing people pay to protect. They even had an investigation by the CCA into their cybersecurity disclosures, which they say concluded without an enforcement action. Still, it shows how seriously these things are taken. They are global, but they still highlight that a downturn in specific metro areas like Northern Virginia or Frankfurt could really impact them. This shows that even with a global footprint, local economics still matter a lot. This is a big one for any real estate company. They had a significant provision for impairment in 2024, losing almost $200 million on real estate investments. In 2025, this dropped to about $78 million, but it still shows they have some assets that are not performing as expected or are no longer core to their strategy. Like many large companies, Digital Realty uses a lot of debt. As of the 31st of December 2025, their total consolidated debt was around $18.6 billion. That is a massive number and naturally brings risk related to paying it back and dealing with interest rate changes. They do mention that most of their debt is at a fixed rate or swapped to a fixed rate, which helps manage some of that risk. Now let us look at the money. Total operating revenues were over $6.1 billion in 2025. That is a 10% increase from the previous year. A big part of that growth came from their stabilized portfolio, which saw a 6.1% revenue increase. This means their existing properties are performing well. Non-stabilized revenue also jumped significantly, almost 17%, mainly due to completed development projects coming online. This revenue growth from both existing and new developments is a good sign. It signals to me that their strategy of building out new capacity and leasing it up is working. Their utility expenses are a big deal, of course, since data centers consume a lot of power. Interestingly, total stabilized utilities went up by almost 3% in 2025. On the non-stabilized side though, utility costs climbed by nearly 20%, which they attribute to more more completed development sites coming online. This also shows how important utility pricing is to their profitability. In 2025, they recorded a provision for impairment on real estate investments of about $78.6 million. This means they revalued some properties downwards because they are no longer considered core to their strategy or their future cash flow expectations were lower. This is a direct hit to their profits. On the flip side, they had a huge gain on disposition of properties net of almost $1 billion in 2025. This came from selling off non-core assets and contributing properties to joint ventures. They sold some data centers in Atlanta, Miami, Boston, and Dallas, and also did significant dealings with joint ventures like the one with Blackstone and the new digital DC partners, NAR Fund. These moves show they are actively managing their portfolio to focus on key assets and generate cash from less strategic ones. Looking at the balance sheet as of the 31st of December 2025, total assets are almost $49.5 billion. That is a huge company. Liabilities are also substantial, around $24.5 billion. Their total stockholders' equity is over $23 billion. This is not bad considering the massive debt they carry. The non-controlling interests are also noteworthy at over $1.4 billion, showing that they do not own 100% of some of their consolidated entities. Net income available to common stockholders was about $1.26 billion for 2025. That is a substantial increase from $561 million in 2024. This jump is really driven by those gains on property dispositions. Earnings per S-Hair also saw a nice bump. Looking at Digital Realty Trust LP, the numbers are very similar with net income attributable to Digital Realty Trust Inc., being over $1.3 billion for 2025, up significantly from 2024. Cash from operations was over $2.4 billion for 2025, an increase from $2.26 billion in 2024. This operational cash flow is crucial for a company like this to fund its ongoing activities and pay distributions. Investing activities used almost $2.2 billion in 2025. This is a significant increase from 2024 and is largely due to continued investments in development projects and contributions to unconsolidated entities. They also spent less on asset acquisitions in 2025 compared to 2024. Financing activities show a net cash outflow of around $486 million in 2025, a big change from a significant cash inflow of over $2 billion in 2024. This is mainly due to a decrease in net proceeds from issuing common stock. They raised a lot less capital through stock sales in 2024. Overall operating expenses were about $5.45 billion in 2025, an increase of about 7.3%. A large chunk of this increase is due to depreciation and amortization, which is a non-cash expense, but also general and administrative expenses and transaction costs went up. This is a recurring theme for them, with over $78 million in impairment charges in 2025. This shows that not all their real estate investments are holding their value. So what does all this mean? Digital Realty is a powerhouse in the data center industry with a truly global reach. Their strategy of focusing on platform digital and expanding their capacity through development and joint ventures seems to be paying off in terms of revenue growth. They are also making smart moves to manage their portfolio, selling off non-core assets to fund new developments and joint ventures. The big gains from dispositions really boost their net income, but it is important to remember that is not from ongoing operations. What I find most interesting is how they are navigating the massive growth in AI and data processing. This is a huge tailwind for data centers, but also a challenge for power density and cooling. Their ability to adapt and invest in these new technologies will be key. The debt load is substantial and always something to watch, but they seem to be managing it with a good mix of fixed and floating rate debt and a focus on credit ratings. The impairment charges are concerns suggesting some of their older or less strategically located assets might be a drag. However, their strong operational cash flow and access to capital markets, including their at-the-market equity program, seem to provide the necessary liquidity. Overall, Digital Realty is a company playing the long game in a crucial sector. They are well positioned to benefit from the ongoing digital transformation, but need to stay agile to embrace new technologies and manage those ever-present risks. They are a giant navigating a complex but growing landscape. Now, what is your take on Digital Realty Trust's financial health and their bold moves into new markets and technologies? Let me know in the comments below. If you found this breakdown helpful, give it a thumbs up and subscribe to Corporate Decoder for more deep dives into financial filings. And hey, join our Discord community linked in the description for deeper discussions. Thanks for watching, and I'll see you in the next one. Jason type scroll text commission file number 001-32,336 Digital Realty Trust Inc. Type scroll text the company, type scroll text our data center portfolio, type scroll text Our product offerings, type scroll. Text, our global customers, type scroll. Text scroll. Risk factors summary, type scroll. Text, our business depends upon the demand for data centers, type scroll. Text, we in our third. Party providers are vulnerable to cyber attacks and security breaches that could materially disrupt or compromise our operations, data and results. Type scroll. Text, our portfolio depends upon local economic conditions and is geographically concentrated in certain locations. Type scroll. Text, declining real estate valuations, impairment charges, and illiquidity of real estate investments could adversely affect our earnings and financial condition. Type scroll. Text, we have substantial debt and face risks associated with the use of debt to fund our business activities, including refinancing and interest rate risks. Type scroll. Text, revenue base. Type scroll. Text, total operating revenues. Type scroll. Text, total utilities. Type scroll. Text, provision for impairment. Type scroll. Text, gain on disposition of properties net. Type scroll. Text, consolidated financial statements of Digital Realty Trust, Inc. and subsidiaries. Type scroll. Text, equity, stockholders' equity. Type scroll. Text, net income available to common stockholders. Type scroll. Text, net income. Type scroll. Text, net cash provided by operating activities. Type scroll. Text, net cash used in investing activities. Type scroll. Text, net cash used in provided by financing activities. Type scroll. Text, total operating expenses. Type scroll. Text, provision for impairment. Type scroll. Text, my take on Digital Realty Trust and its direction. Type last scroll. Text, what is your take on these numbers and what they signal for the company's future?